we had this liquidity that was being purged here. So at the purge of this liquidity, we have this internal structure shift, and then we have an external structure shift right here. So now, once you have your shift, what is the next thing that comes to mind? The next thing that comes to mind is your order block, your fair value gap, right? Because you need to have a fair value gap where the market buyers and market sellers will have some tug of war, and there will just be a gap in the market, all right? And then that point is where traders tend to revisit to balance the market, because the market will always do one of two things: balance an imbalance or take out liquidity. That is what the market will do, these two things. So now you see that we have this liquidity grab here. Then we now have what? The shift. Because if you look at this shift here, you see that actually closed with a full body candle. Okay. So now the next one is this internal structure shift here. So after the internal structure shift, what are we now looking for? Is to see if we can have some form of imbalance and then closure. All right. A closure that, okay, we have this other block right here. I will also have this indecision candle. Now, whenever you are looking at a fair value gap or an imbalance, and you see an indecision candle within that imbalance, just mark that imbalance, because the market will always come back to that imbalance before moving on. Price has to balance the market for it to go and start seeking another place or another form of liquidity. So we had series of weak rejections for over 1 month. This month, week 1, week 2, week 3, week 4, and week 5. So for over 1 month, we have just been at this price level. We have this fair value gap. We have this what? We have this breaker block that is here. So now, moving on. What the market actually did was to grab liquidity. So we have this liquidity that was grabbed. This one came, took out that low, right? After taking out that low, what did it do? It had a rejection, closed back up. Now the next candle that opened, because we already have liquidity grab here, right? So this is just the low. So let me mark the high. So as we took liquidity from this low, the next point of liquidity distribution will be at the high. That was why I was bullish on dollar last week. And I was telling us, and everything XAUUSD is going to be bearish. That was what I said. So now we have fair value gap. We have this other block, also have this bigger other block right here, supporting and being a confluence to these directional buyers. So you see that as the market will open tomorrow, you would see, as the market will open on Monday or Sunday night, yes, that's tomorrow. As the market will open tomorrow, you see that we are going to have reactions from this level. So it's either we close with a full body candle close and start going up until these levels here, up until 100.643. So the market could possibly tap into this, right? Close above it and then start gunning for this high that is here. Okay, so when you now have that as your bias and you have established that as your bias, you see on the lower time frame, that's the the daily time frame, you can see that we have these two form of rejections here. All right, the market came, went up, came back. What did it do? It's now going to the form to the area of what? Of our next draw on liquidity. Of our next draw on liquidity. So when you have established this as your directional bias, what do? It means that every other thing that you're actually going to be trading will be what? Will be bearish. Every other thing that you are trading will be what? Will be bearish. Now the dollar is bullish. It means that gold will be bearish. GBP USD will be bearish. Euro USD will be bearish. NZD USD will be bearish. These are things that you can actually look out just by a singular what? Asset class that you analyzed. You already have up to 5 or 4 asset classes to actually trade from. I hope I'm making sense. Type on the chat box if I'm making sense. For gold, for the past few weeks, I've been saying we are bearish on gold. And you see that we have tested this level of fair value gap. We are actually in that box. And you see that we went above the 50% and we came back and dropped below it, taking liquidity from this high to distribute to this low. Okay, so that was how we got this 2 weeks of sell. And now, last week, we took liquidity from this point and we distributed to this point. So right now, the trend is about continuing. And if you look at this, you see that we also have a CRT kind of trading pattern here on gold, right? So it does mean that gold is still going to drop for next week. So start positioning yourself, start looking for where you are going to take position and do what? Take advantage of it. So on the daily time frame, this is where we retested. So now we have this low, this low, this low, this low until it is what? It is broken. So when we had this break of market structure shift here at this low, after tapping into this higher time frame fair value gap, it is safe to say that we are actually in a very in a continuation market of this particular asset. A lot of people will actually be buying this stuff, but I assure them if they are not careful, they are actually going to go to the village. So when we had this market structure shift, we had our OTE. We had OTE reversal. All right. Not only that, we have this order block that was mitigated. Even after we had this rally here, we had this order block that was what? That was mitigated. So the mitigation of the order block, the liquidity grab, and then the close. Remember, you already have your DXY that is actually bullish. All right, your DXY is bullish. So it means that every other thing that you'll be looking out for on gold for that period of time till your target is met is what you'll be looking out for sells on gold. And that's exactly what happened here. If you look at the chart here, you see that we entered into some level of consolidation, all right, from Tuesday, from Tuesday last week. Is that Tuesday? Sorry, from Wednesday last week, the market started doing what? Ranging. The market started ranging. I know that there are a lot of people who are going to lose their account within this period of time. It is those people whose account survived that the account is going to do what? They are actually going to make money. Okay? So this range now is just testing a lot of traders. But then you already know that your bias is what? Your bias is sell. Why? Because DXY is buying. And you see that there was a liquidity grab from a previous week high we grabbed liquidity from this previous week high and it was broke structure. Then we had, after we grabbed that liquidity, broke structure to the downside, we had a mitigation of a higher time frame order block, which is this. So that higher time frame order block was an indication that this market is still about to do what? Still about to go down. So this is how you can actually do your analysis, and you do what? You grab your weekly directional bias. What you just need to know is, where is this market heading to? Where is this market going to? What is the possibility that this market is going to get to this point at a point in time? When you understand that, then every other thing comes in alignment. Your trade management, your take profit, your profit margin, your gross level, blah, 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 everything that has to do with your profitability, you do what? You take, you make. So it's very important that you understand trade management so that you can be able to, stay in the market, take your trades when they appear. Now, for gold, like from immediately we entered the range, you see that there was no clear movement. On Wednesday, there was no clear movement. But on Thursday, we had, during the New York section, we had this liquidity grab here. We had this liquidity grab, and then we had this structure shift here. We have a fair value gap plus an order block. So this would have been your entry for a short. Even if you did not enter there, you can still die down to the lower time frame. Yes, you see it aligns so perfectly well with the lower time frame. And where would be your take profit? Your take profit, first of all, take profit 1 will be at previous day's low, which is at that's Tuesday's low, right? Tuesday's low, then your final TP, which is at previous week's low. So you see that this clearly will give you 1:11 risk to reward, bruh. You know how much you're gonna make if you reach a $1,000. If you reach $1,000 for this trade, you are going to be making $11,000, bruh. That is the potential of understanding your directional bias, knowing where the market is going to, and taking advantage of it. So the process is very clear. You start from the weekly time frame. Try to understand, number 1, liquidity. Number 2, market structure, right? Understand liquidity, understand market structure. What are they giving us higher highs, higher lows, or are they giving us lower highs and lower lows? Understand that. Then after that, you now try to understand your POI levels. That is your fair value gaps or your order block levels. All right. When you understand that from the weekly, you now drop to what? The daily time frame. The daily time frame, you also look for what you looked at on the weekly and check, okay, are we having an alignment with the weekly time frame? Because most of the time you will see that the weekly time frame will be showing you bullish, but the daily time frame is showing you bearish. It can happen. So it is always good for you to drop down lower to see that, oh, we have time frame alignment. I have talked to us about this before. Time frame alignment. All right. So you go to the weekly, look for all those, and then you come down to the daily time frame and you make sure that it's in alignment with the weekly time frame. Then you drop down to H4. So H4 now will show you the actual trend, what it looks like, the skeletal trend, right? The higher highs and higher lows, higher highs and higher lows and all that. Even where they broke structure, when we had market structure shifts and all that, the H4 is going to show you. So you need to understand, okay, H4 is in alignment with daily, and daily is in alignment with what? Weekly time frame. So you now drop down to your entry time frame. Me, I usually use M15 as my entry time frame so that I'll not start looking for what is not there. So I usually use M15. Right on this one, you see we had our what? Our liquidity grab, we had our market structure shift, and what do you have? Very simple. You have your order block, you have your fair value gap, a return to it to retest the order block, and that's it. This trade actually has dished out a 1:10 risk reward. See it, 1:10. That is what this market has actually dished out. So getting your directional bias is just very simple. Okay, focus on the DXY. Understand what the DXY is doing. Then you can now use it to trade your Euro USD or GBP USD and all other trades. So going into the new week, I am anticipating that we have liquidity grab here, and then we see some little pullback to continue higher. That is what I'll be expecting on DXY coming in next week. I'll be expecting some retracement, then continuation. That's what I'll be expecting on DXY for the coming in week. Because if this market should open right now, this will be a potential zone covering both fair value gap and the volume imbalance. Once the market opens, we are going to have that place as a fair value gap area. So I'm anticipating that the market will do what? The market is going to give us a lower time frame shift, come back up, tap into this zone, and then continue higher. That is what I am actually anticipating to happen. If this does happen, then you know that gold is going to sell very hard. Gold is actually going to sell very hard. So that's my analysis for next week. I believe that we understood what I explained. So I'll see us all on the next video that I'll be dropping. And if you have not subscribed, try to subscribe. Leave us a message on the comment section, what you learned, what you want to learn, and all that. I'll see you on the next one. Bye-bye.